Okay, the one reason why sectorally the IT pack is under pressure is perhaps what Cognizant had to say. They are indicating a slower 2013 for the IT majors. Let's bring in Sunita Nagpal to tell us what exactly has Cognizant said.
Basically, they filed for their 8K filing with the SEC, and what it implies is basically gives you out what will be the target for the compensation given to its top employees. If they've set a target for 50 to 100% vesting of stock, and if you work based on that, then to achieve a 100% target, the company needs to do a revenue of roughly about 8,500 crores, $8,500 million. That would imply roughly about a 16% growth in 2013. That's what the company is expecting, and if you go by the 50%, then they are implying a 12% growth. So 12 to 16% is the growth that the company is projecting, and which is slightly lower than what analysts were expecting them to do in 2013. So it basically means that if the company, which has been growing at a higher pace than the industry, if that company is going to slow down from 20% in 2012 to 16% in 2013, then it means that there will be a slowdown for top tier companies, Indian companies also. So the companies are not likely to do more than 8 to 14% in 2013, which doesn't augur well, especially after a very sluggish 2012 that we've seen for these companies. So that is why you're seeing that there is some pressure coming on the IT stocks. But having said that, some analysts also believe that there could be the Cognizant company could be also conservative in their guidance. Remember, they had to cut down their guidance in May 2012 from 23% to 20% after the slowdown they had seen. So probably that is playing on their mind, and they're going conservative this time, only keeping it at 16%, and they might end up doing slightly higher than that. And you also have to remember the base is also getting larger, so 16% is not bad for 2013. But having said that, this means that the other IT companies will be going at a slower pace than 16%.
Okay, Cognizant fearing a slower 2013. Sunita, thanks for that update. Ashwini, a quick call on the IT pack. We're seeing a fair amount of weakness across the big boys in IT.
Well, they have been underperforming, and other than, say, an HCL Tech, most of them, including TCS, seem to have started some kind of an intermediate downtrend. TCS can get closer to 1180 to about 1200 if a serious decline begins. Infosys again 2200, 2250 to about 2500 is the band. As I had said some days back that that the gap that it formed couple of quarters back when it fell 10% on the day of the results, that gap is at about 2550, and it's often unable to get past those levels. So chances are that while the Nifty continues to rise, most of these stocks will remain range bound, particularly getting into the January results.
Let's stay with the IT space, and Mindtree is optimistic about business in the coming months compared to the last year. In fact, Mindtree CEO Krishna Kumar Natarajan says that clients are in the process of deciding on IT budgets for 2013 and that there are no delays as compared to what they saw in 2012. He also sees discretionary spends coming back. Let's listen in to his interview with ET Now's Chandra Ranganathan.
We do anticipate that over the next 6 to 8 weeks, clients will freeze their budget. If I were to really make a comparative judgment with respect to the mood on spending compared to calendar year 12 vis-a-vis calendar year 13, we do believe the tones are more positive than what we heard in 2012.
Right. But the whole issue around fiscal cliff, could that be a big spoiler when it comes to client budget?
See, clearly what we are seeing is people are concerned that a decision on the fiscal cliff should be made, and to that extent I think they are watching it. Also, people believe that since President Obama is in his second term and clearly wants to revive the economy, I think both parties will be accommodative to see that they don't do anything which will put the economy on a tailspin. Right. So we do believe the outcome will be a balanced one, and it will not in any way impact demand.
Would this also include discretionary spends coming back perhaps this time around?
I would certainly be positive about discretionary spends coming back, because clearly I think the sort of discretionary spends which clients are wanting to do is to enhance revenue or make their customer experience better, and they have sort of delayed many of those for at least 3-4 quarters now. So clearly the strategic ones amongst the discretionary spends would start seeing the light of the day now.
Okay then, quick break then on this edition of Markets at Lunch. When we come back, stock ideas as always with our three experts, C.K. Narayan, Ashwini Gujral and Mitesh Thakkar.